Hi once again. Back with another review at Tips and Sites, and as usual, trying to keep it below 10 minutes. And this going to sound a little bit sketchy because it's during the day and I got people or I got company on my side. So, in case there's some nastier sounds, then do bear with me. Anyway, without wasting any time, there's a review made on the 12th of December, which is a Tuesday, 2023, and we'll be reviewing NASDAQ, the previous week's price action and yesterday's price action, which was on a Monday, right? So without wasting any time, let's dive into it, right? So like I said, we're reviewing rather US100 or NASDAQ, or I don't know, NQ, whatever, which is futures. It's basically the same thing, right? So without wasting any time, so we have what we had. There's weekly BC, and we know we're coming from an internal range liquidity pool to an external range liquidity pool. There's from an imbalance to a liquidity pool. We have an old high right here, which is a swing high. So that was the anticipation. And there's this week's price action. And if you look closely, price has been trading off this. When zooming out on the weekly, we're trading off this weekly BC rather. And we have this low resistance liquidity run in the form of this failure swings. And we have that premium inefficiency in a form of what? A CB, all together with what? A volume imbalance. You can see there's a volume imbalance right there. So that can still be used as a strong draw on liquidity. And we have our liquidity pool right here, which is this price action that I was referring to, BC to a liquidity pool. Now, looking at the daily, uh, you can read this on your own. So what happened is, let me just sum it up. Last week failed to reach what? Failed to reach the buy side objective right here, which was the weekly objective on NQ or NASDAQ. It did reach it on what was that? S&P 500. So we employed what? The six sister approach, which is basically when one of the two or three correlated markets reaches a certain objective way before the others, then the others are forced to do what? They are forced to follow suit with their pricing. So there's Friday, we fell short of what? Fell short of that buy side liquidity pool. And then Monday right here, which will be used as what? The day two reprice to that buy side liquidity pool. And why is Monday being traded when we have made exceptions of trading Mondays? That is because during FOMC weeks, and NFP weeks, and what am I missing? There's FOMC, NFP, which are basically taboo days. You are bound to trade Mondays. If you see clear price action, you are allowed to trade Mondays. You can check out a Twitter space by ICT. It's called Trading Taboo Days and learn more onto it. Uh, that is not the purpose of this review right here. So Friday right here and Monday we'll be looking at this 2 days, and on the 4 hour, this is what I had, right? This is what I was looking at on the 4 hour, and this is what I thought price was gonna hold price. This 4 hour BC, right? But eventually, since it was NFP, we see NFP doing what? Weaken through to what? A lower fair value gap right here, right? So we're looking at what? A weekly PDRA. So we have to use what? 4 hour price action to confirm what? A change in the state of delivery right here with close above on this candle, close above this consecutive down close candles. We form what? Bullish price action or buy side of the curve is activated right here. So we had our smart money reversal here and the market maker completion, which is the terminus right there, which is sometimes considered as what? The original consolidation, right? So this was Friday, we came into a discount of this from this low to that high. We have a discount on the range. Let me just go to the next slide. Right here, you can see from the low to the high, we're coming into a discount. It's a discount BC on the 4 hour, and still it's trading on to or into what? A daily order block, a daily bullish order block. Let me go back to the daily time frame. You can see this daily order block. We trade back into it. The opening price of the order block, we trade into it and reject it. So we have confluence of these two key levels. So let's look at what Friday served. You'll study the other standard deviation projections on your own. I don't have that much time to go through them. I've already hinted or taught on them. So basically, what Friday did, we had what? The power of three coming into play: the accumulation, manipulation, and distribution. So we had London and Asia session doing what? Accumulating what? Accumulating orders that are going to be paired with smart money's buy positions or buy orders, right? So we accumulate and then manipulate. This is the NFP Judas. During NFP release, we manipulate to the downside into what? Daily order block and the discount BC on the 4 hour. Whichever level that you was going to be looking at, it's still okay. You can still not delineate the 4 hour BC and use the order block. You can still use the 4 hour BC and use and miss the order block. It's still fine as long as you have a key area on the higher time frame. So you can see how we distributed post NFP release, and we eventually came back into what? Looking at price, you can see we have a volume imbalance right here. It comes back into it during lunch, and then we trade higher, taking out buy side. Took out buy side already, so that would have been that with Friday. But on the entries, so we see this down close candles forming the Judas swing on the 5 minutes. And personally, I needed close above what? I needed close above this opening price of this down close candles, or you might want to be using what? The breaker, right? So we have a 5 minutes order block or a 5 minutes breaker block, which is this last up close candle. We have a low, a high, and a lower low. Trade back into it. You might be buying that, and your stop loss will be where? Stop loss would be right here. But what I was looking for, in all honesty, was price to trade lower than this fair value gap, right? I was expecting price to trade at least to this lower fair value gap. If you look at the slide here, so that you don't think we are always reviewing hindsight price action. Right here, I was looking at this on my phone because I was away from my trading station. So basically, we trade into that 5 minute fair value gap, which is right here. It was right here, right? This 5 minutes fair value gap. Trade into it, and the anticipation was that we can push higher. I was looking at price to see whether it will put in this low, trade higher, close above this down close candle, and form another fair value gap so I can tag in and attack the buy side liquidity pool. You can see how I'm placing what? I'm placing my buy limit orders right there. There's basically somewhere around that area. I didn't want to put it here or buy on this uh okay, buy on this breaker. But if you look closely here on the 15, you can see this down close candles. That's where the second entry came from. There's one that is above there, and the other one is for what? For that 5 minutes fair value gap. And the moment we confirmed that 15 minutes fair value gap, I entered another buy limit order right there. But in all honesty, you can see what price did, right? Price never came back. I don't have the 15 minutes here, but it never came back to fill in my orders. So I ended up doing what? Canceling all those orders and just going on about my day because it was a Friday after all. So yeah, I was protecting my stop loss. Right, I was protecting my stop loss right there. So let's look at Monday because we missed Friday's price action. So Monday, we're saying Monday will look to deliver the previous week's unmet objective, right? Monday is tradable only because of this narrative accompanied with what? It being this week being what? NFOMC week. So Monday and Tuesday are pretty much tradable. Not Monday, let's just focus on Monday, right? Let's not complicate it. And we didn't have any red folder news release on Monday on UST, but instead, what are we going to use for volatility injection? Equity is open. What is equity is open? That's your 9:30 New York time opening price or opening time, right? We have the New York open, which is 8:30 on Forex and this market, and then we have the equities open, which is 9:30 for the index markets and futures and all those. So let's look at the lower time frames to see what opportunities we had. So there's a 15-minute time frame. Or the pairing, we saw it on the 1 hour, and then we put this prior to the New York session, right? So you are not trading none of this stuff up until you get to at least 8:30, right? So what do we have here? We push, changing the state of delivery. We close above this down close, consecutive down close candles. We push higher. We have what? We have this fair value gap accompanied with what? Accompanied with this order block. You might be trading that. That is fine because there's now past or post 8:30, right? You might be trading that and putting your stop here, but I'm not comfortable with that, right? Because it's a low risk buy. And we have another order block here, but you can see how we trade higher. One more time, we're leaving behind what? Another order block. There's what? A propulsion block. And we are leaving behind a fair value gap. Come back into that area. Okay, so you have about that, but there's a huge vehicle passing right behind my cabin. So I'm gonna have to wait up below. But yeah, what I was saying is we come back into a 15 minutes fair value gap. Now here's the thing, right? 15 minutes fair value gap, you want to be trading this fair value gap, stop loss right there on the swing low or that swing low, whatever that you're comfortable with. Or you might be trading what? That order block, whatever that is, okay with you. And there's what? This here that is delineated is what? The 930 open. And you trade that. Where's your buy side liquidity pool? Right here. There's your objective. Last week's objective. That is your take profit. And how many minutes are you into the trade? If you enter right on this candle, you have 5, 10, 15, 15 minutes and you're out of the trade. Just like that, you might be done for the week. You might have made so much that you are not interested in trading for the remainder of the week. You see, just on a Monday and you're done. So for those who are not content with the 15, but whenever price action is this clean on the 15, I don't want to be going to the lower time frame. But for the sake of completeness, there's what the 5 minutes look like. So we came back into a fair value gap. Like I said, there's 830. You might be buying this fair value gap, stop loss right there, still fine. Or buying on this order block, we close above it, come back into it. It's still fine. And then we see price trading all the way lower. There's 830, 930 rather, lower into what? This order block. You might be trading that, or it's still trading that fair value gap. And then we push higher, close above this down close candles, and we come back into that area. You might be buying on that order block on the 5, and your stop loss would be on that 930 slight retracement, deep retracement right there. And then you'll be done and in and out of that trade. I think I made a mistake. There's not 15 minutes. There's a 15 minutes candle, right? It's 15, 30, and 45, and you'd have been done. There's a pretty much fair time to be executing, right? It doesn't frustrate you anyhow. So with that being said, this is the last quote. Every new day is a chance to try again. So keep that in your head, right? Whenever you miss an opportunity, there's always going to be another opportunity. We are only considering the simplest of setups, right? From a fair value gap to a liquidity pool, from an imbalance to a liquidity pool, from a liquidity pool to an imbalance. It's simple as ABC. So don't overcomplicate it. And with that being said, it's a